Welcome back. So today we're touching on Creditors Recon and Bank Recon for grade 11 accounting. Okay, so we want to start by reading our questions. So we've got question 1 on our right hand side and our answer book on our left hand side. Okay, let's start reading and analyzing together. So 1.1, our Creditors Recon. Muller Stores has received a statement from a creditor, Cougar Traders, at the end of October 2024. Okay, so dates are always important. We've got October 2024. We can draw out our timeline. So we've got October there, 2024. So we know reconciliation always happens for a month. So it'll start at the 1st of October all the way until the 31st of October. Okay, so let's go back. What other information are we given? We're told that Muller Stores, which is us, has received a statement from a creditor, Cougar Traders. Okay, and this is them, or creditors. The balance on the statement does not correspond with the balance on the creditor's ledger of Muller Stores. So this is basically telling us we need to do a recon. Okay, so now we're given our creditor's ledger, which is our books, and we're given debtor statements, which is their books. Okay, and why does this matter? Because creditors' ledgers, so we see our balance increasing on our creditors' ledger because there are creditors' ledgers of Cougar. Cougar is our creditor, increases on the credit side and decrease on the debit side, whereas a debtor statement will increase on the debit side and decrease on the credit side. Perfect. Okay, so just be careful of your signs there as well. Okay, the first thing we want to do is analyze our totals. We're told that the statements do not correlate. So we've got totals at the very end, our final totals, and we already see our amounts don't agree. So there is adjustments that need to be made. Okay, we then see what other information does not agree. So we see the statement ends 28 October, but the statement ends on the 24th of October. So these two amounts will possibly need to be added to our debtor statement. Okay, what else do we analyze before we even start with the question? So we're seeing this 21,600. Do we see it anywhere here? We don't, so we just highlight that amount. We've got this amount of 6,400. We see it here, so that's okay. We can just take that off. We've got amounts of 640. Do we see it here? We don't. So we're just going to highlight that 640. We've got amounts of 9,760. And this amount appears in the statement below. So that's good. We've got an amount of 140, but here we're seeing the amount is 1,400. So it doesn't exactly agree. So we're just going to highlight that for ourselves. And lastly, we've got an amount of 2,494, which appears above but does appear below. So that's also something we'll take off because that's good for us. Okay, so we want to move on to question 1. We're given creditors' provisional balances. So we're going to start with our totals. So we've got our creditors' ledger. We've got our creditors' ledgers of Muller. We've told our total is 29,174. And statement of Cougar. Here's our statement. We've got a total of 29,554. Perfect. Okay, so our first additional information. We're told that Muller Stores made an error in processing invoice. So who is Muller Stores? Muller Stores is us. Okay, so Muller Stores made an error in processing invoice 5270. This amount's over here. And we see we've got the same amounts over here. So clearly the 1,600 was correct. So we'll say, what is the difference between 21,600 minus 11,600? And we get an amount of 10,000. Okay, and this amount is going to adjust Muller Stores because Muller Stores made the error. Okay, so we're going to minus that 10,000 to bring it down to this 11,600. Perfect. Number 2, we've got Cougar Traders should have granted the discounts on the 6th of October. So Cougar Traders, so them did not give us a discount in the statement, so we need to account for it in the statement over there. And the discount is for an amount of 640. So minus 640 because it's a discount. Perfect. We've got number 3. An investigation showed that the amount reflected on the 16th of October with regards to the goods returned by Muller Traders was correctly entered in the books of Cougar Traders. So their books is correct. So it means Muller Traders, our books is incorrect. Okay, so where was this amount? 16th of October. 16th of October. We're saying which amount was correct? 1.4. 16th of October. 1.4 was correct. Our statement was correct. So we want to then correct it in our creditors ledger. Creditors ledger, we've got 1.4. Goods returned, we want to increase our goods returned. So further decrease 1,400 minus 140 will get us a total of 1,260. So we're further decreasing this 140 by 1,260 to bring it to 1,400. Are we all making sense? Yes. So we're further decreasing that amount to bring us to negative 1,260. Okay. And there is no other additional information. Look at us, we didn't even read our question. So let's start with the question 1.1.1. Use the table provided in the answer book. Here's our answer book on this side. Okay. Okay, eraser's not working. There we go. Answer book to show the changes or corrections in the creditors ledger of Muller Traders at the end of the month. Use the debtor statement received from Cougar to indicate the changes as well. Indicates increase with the plus and decrease with a minus next to each amount. Perfect. Okay, so what else have we not accounted for? Remember we said that this statement from Cougar ends on the 24th of October, so there's days missing in this month, yes? And the statement ends then on the 28th. So let's account for those two transactions in our statement that were not accounted for before. Okay, so we've got debit, so we've got a decrease our Cougar statement by 10,000, and decrease again our Kruger's statement by 1,000. Okay, so that's everything. We've accounted for everything. So everything that we have highlighted, we've accounted for. So we are happy. Yes, let's add up our totals. Give you a second to add those up. We should get a total of 17,914, as well as on the other side 17,914. Perfect. Okay, so 1.1.2. Name 2 tasks of the creditor's clerk to maintain or improve the internal controls of creditors. So this is a theory-based question because we see we have no other additional information and no other information in our question. So this is purely theory-based. How does our creditor's clerk improve internal controls? Okay, so one of the reasons that you could provide is make sure creditors are paid on time to prevent interest on overdue account. Okay. Something else that we could then say is that invoices should be compared to goods delivered to ensure all items were in good condition when received. Okay, so these are things we remember. These are theory questions, things we learn. because doesn't matter the question, we'll always get a set of theory questions. Okay, so familiarize yourself with as many theory questions as possible so you are able to answer as many theory questions as they give you. Okay, let's move on to our next theory question. So we have then got before granting credit to new debtors, it is important for them, our supplier, to establish an effective control measure prior to granting credit. So it's no longer from our perspective, now it's from our supplier's perspective. Okay, prior to granting credit, documentation such as identification and proof of address is mandatory. Identify specific documentation that the supplier may accept from new debtors as a valid proof of residency. Okay, so this is also something you can learn because it is not in your scenario. So you've got your electricity bills is something you could use. Electricity bill. Because this then has your proof of address. Your bank statement should also have your proof of address. So bank statement, municipality statements should also have your proof of address. But if you don't live somewhere, you don't own the property, your rental agreement should also have your proof of address. So you can then add rental agreement. Should have your proof of address. Okay, let's continue to question 2, which is our bank reconciliation. Okay, so we have got, let's read it together. Time Tech Traders buys and sells smart watches. So what do we get from that statement? That we've got inventory, which is watches. The business is owned by Algan Timekeeper. TimeTech buys and sells on credit for cash. Buys and sells stock on credit for cash. Okay. And for cash. So they buy on credit and they buy on cash. Okay, the official bank statement for September 2024 was received. Okay, so this basically means bank statement doesn't have amounts from 25th of September all the way until the 30th of September. So it's things we need to add. Like in our statement omitted things from 24th of October all the way until the 28th of October. So you just need to add those items. Okay, all transactions are controlled by Carrier Johnson. Number 1.2.1. Analyze each transaction below by completing the columns in the table in the answer book. So this is what we are completing together. Our highlighters don't seem to be working, but that's okay. So we're doing 1.2.1. Okay, let's start with 1.2.1. So using each transaction. So here's our transactions. We're going to work through our transactions for the month of September. So remember, Bank Recon talks about one specific month. So we've got 30 September and 1st of September. So beginning of the month, this is when our statement was received, 25th of September. Bank statement. Okay. And these 5 days are not accounted for in your bank statement. So number 1. We're told that a stop order payment of 6,600 for the monthly repayment of the loan from Tempo Bank must still be recorded by the business. Okay, so meaning it was recorded by the bank, but not recorded in our business, our books. Okay, so stop order payments, because it's a payment, we're talking about CPJ of 6,600, must be recorded by the business. So we've got then our loan from Tempo, and we are decreasing our bank because it's CPJ by 6,600. Perfect. That's all that's needed for that line. Number 2, an EFT, EFT 283 for 2,400 issued by the creditors, part-time payment of the account of 4,000 appeared in the cash journal only. So it appeared in the books, our CPJ, but not in the, appeared in the book, so tick that, appeared in the book, but not in the bank. So let's include this in the bank. So we've got EFT 283. So now we need to add it to our bank recon. So remember, before we start, we say debit bank accounts increase on the debit side, decrease on the credit side. Bank reconciliation, okay, because they owe us the money that belongs to us, increases on our credit side and decreases on our debit side. They see us as creditors. Okay, so they owe us the money. Okay. So we are decreasing this account, our bank, by 2,400. Okay, because it was issued to a creditor, so it's a payment, part payment. Okay, number 3, EFT 288 for 375 appeared on the bank statement. This EFT was issued to Chronolink Supplies for stock purchase on the 12th of September 2024. It was incorrectly entered as 357 in the cash journal. So when we have these type of incorrect things, we calculate our difference. So we've got 375 minus 357. Okay, and our difference is 18 Rand. So we've got EFT 288 appeared on the bank statement as that amount, EFT. Okay, incorrectly entered in the cash journal. So our bank is correct and our books are incorrect. Okay, so is this a payment or is this a receipt? Stock purchase, money going out. So decreasing our bank. Decreasing our bank by 18. Perfect. Okay, number 4. We've got a deposit of 52,000 made on the 17th of September 2024. Was entered in the cash journal but did not appear in the bank statements, meaning we need to add it to your bank statement. Okay, so add to bank. Okay, so we've got a deposit, okay, of 52,000 that did not appear in bank statement. So deposits increase our bank balance, so we're going to put it on our credit side, 52,000. Okay. Number 5, the bank statement showed bank charges of 359 which have not been recorded by the business. Okay, so your bank has been accounted for, but your books have not. Okay, so you want to change your books, so you want to say bank charges. Because it's bank charges, it decreases your balance by an amount of 359. Number 6, EFT 293 for 1,250 from the previous month's reconciliation statement issued to Moda for the monthly telephone account appeared on the September 2024 bank statement. Okay, so appeared on previous month's bank statement. We are saying it was previously outstanding, but now because it appears it's been finally accounted for, there is nothing to add. Therefore, no adjustment is going to be made. So we're saying telephone account, no adjustment. So previous recon fixed it, therefore we do not need to fix it this month. So this recon that we're doing here is for fixing. So we are not fixing it again. We are not double accounting for it. Okay, so this number 7. A deposit of 15,000 for rent received from Moses Traders did not appear on the bank statement for September. After investigation, Carrie stated that she was robbed on the way to the bank. The owner authorized the cancellation of this deposit as he was not certain if this money will ever be recovered. Okay, so your books probably accounted for it and your bank statement did not account for it. But because this amount will not be recovered, your bank So this is supposed to be books. So your books accounted for it. But because this amount will not ever be recovered, we need to make sure that we remove what we said we are going to deposit, this 15,000 from our books, and bring it down to 0 because technically our deposit did not occur. So we can then say our deposit must then decrease our books. We decrease on our credit side 15,000. Perfect. Okay. And because it was not in the bank, no adjustment needs to be made. Number 8. A payment of 10,000 received from a debtor was recorded correct on the bank statement, but recorded as a payment in the bank account. Okay, so a payment of 10,000 received from a debtor, so this is a receipt. It's supposed to increase our bank balance, was recorded correct on the bank statement, so bank is correct. We're then adjusting our books, so CPJ and CRJ, but it was recorded as a payment in your bank balance, so your bank accounted for it as a CPJ, increase in your CPJ, so a decrease. So, because it's a payment, okay, so we want to say payment. Because it's a payment, to correct this payment and to bring it back down to 0 because it's incorrect, it's actually supposed to be a receipt. We want to say plus 10,000, okay? And because they're now, so that the first thing is our correction. So your correction is then increase your CRJ to account for your incorrect CPJ of 10,000, okay? And then number 2, we are then saying we are then correctly accounting for it. So now we've got to increase our CRJ by the receipts we actually did receive. So we've got a further 10,000 Rand for your actual receipts received. Okay, so we've got 10,000 Rands there. If anything does not make sense, jot it down in the comment section. We'll all help you. We'll all discuss it together. This is where we grow and learn together. Let us move on to the second part of our question. So number 1.2.2. Okay. So 1.2.2, as an internal auditor, you are not happy with the control of cash in the business. Explain 2 problems that you have identified from the transactions which show a lack of control, quotes figures, and advice on how these problems can be avoided in the future. Okay, so first of all, we have got a deposit of 52,000, okay? So first problem we've got is large deposit. Why are we depositing such a large amount? So large deposit of 52,000, that's your figure. Money held for too long. So large amounts, money held on premises for too long, which could lead to theft. Okay, and how do you fix this? So you then have deposits done on a regular basis. Okay, so then decrease how much is withdrawn. So you can deposit 52, but if you get robbed on your way to the bank, then 52,000 Rand is gone. You know, so it's a lot to lose. But as opposed if you get robbed for 5,000, it's only 5,000 that you'll lose. Okay, so second issue that we can find, okay, there we go. 15,000 was stolen on the way to the bank. Okay, so we've got 15,000 stolen on way to bank. So we have lost that. Okay, so deposits are done by one person. And there's no protection for the person who goes to the bank. We need a safer way of depositing this money. So we need a rotation of duties. Rotation of duties for one. And then obviously we need to provide some sort of security. Okay, so such as cash in transit. I'm sure you've seen it, those money cars now. Cash in transit, business to transport money. You can think of any reason as long as you justify it and you make it make sense. Okay, provide advice that is justified as well. You will get all your marks. Okay, so another key point here on this large deposit is that we have the rolling of cash, which is another term in accounting. Cash is rolling, cash is sitting, which is problematic. Okay, customers could then make EFTs. So money is not, all your transactions are not all cash. So EFTs could be done. EFTs could be encouraged. Card transactions could be encouraged. But that's it. That's it for this video. We've draw as much as you can from this, work it out, pause the video as you deem fit. We'll continue on bank recon, creditors recon in the videos to come.